Okay, folks, so welcome to the Contrarian Trader. This is Bob Desmond. Tonight is what we call Members Stock Pick Request. This is where we review the charts that members submit for review that they'd like me to go over on video. It's a free service that we provide. All you do, enter your stock symbol here in the members area in the ticker cloud. If you like CYBR, enter the symbol, hit submit. I see you on the screen, and then I go over the symbol on video for you. But you need to be a member. We do have a 14-day free trial offer. Let's get started on a bunch of charts that we need to go over. The first stock up is Alpha Natural Resources, symbol ANR. This is a weekly chart. It's important to begin with a weekly chart with ANR because you need to see where the stock has been to appreciate where it is now, how it's setting up, and what the trade opportunity is. So let's identify the fact first that we remain in a downtrend. The downtrend is not done yet. When we begin to break out and close above these resistance levels, then we know that the downtrend is over, a consolidation is at hand, and the probability of a new uptrend is likely. But as it stands right now, the stock came off of extreme oversold levels. It respected the lower band of its declining downtrend line, reversed, and it's up nearly 100% so far this year. So it's really not a wise move to make to say, go ahead and open up a position in ANR while we're at resistance last seen back in December. So there's overhead supply here, meaning buyers back here who held through this downtrend because they thought they were getting a deal. But the shorts leaned into the stock. It broke down below support and broke down to new lows. These people want their money back. It's really trading 101. Appreciate the psychology of previous buyers. Understand what they're thinking, and all they're thinking is, all I want is my money back. They're not looking for a profit. They just want their money back. Now, oscillators. RSI, which is a forward-looking oscillator, indicator, whatever you want to call it, it is making higher lows, which is bullish, meaning while the price went lower, the RSI didn't confirm that price moved lower. It didn't make a new low. It put in a higher low, which is bullish. Now what we need to see is a breakout. Now, if you take a look at Ultimate Oscillator, same thing, higher lows, and we've broken out on Ultimate Oscillator, but remember, this is a weekly chart, and we could easily close down lower on the week and close back down below this resistance level. So we want to check in with this chart after the close on Friday to see whether or not we've locked in this breakout. I think that ANR, it would be best for longs were it to pull back in an orderly fashion on declining down volume and then resume an upward move. That would be the best risk-reward entry point because then you could put a stop loss just below where we found some buyers or support. But as it stands right now, I think it's a watch. I wouldn't buy it. I would look for a pullback and then look to add or open on that pullback. CIXI, this is one I went over a while ago. And you could see that it's amazing how the charts really, they tell you a story. I haven't touched these trend lines in several weeks, if not months. And you could see that we put it in a double bottom setup. $3 per share was good support. Now we have rallied up and through the upper band of the declining downtrend line. If I didn't mention, this is a weekly chart. So we managed to close above the breakout point back in December. Following week, it failed, broke back down again, consolidated. Now we're trading above this upper band once again. Great support here. So the markets are sending us a signal. We have buyers below. However, we need to appreciate the fact that we have a lot of overhead supply up here. So the stock has run a good distance, but understand if you open up a position tomorrow morning, you have resistance above, and they're going to weigh on the stock. Me personally, I would look for either A, an orderly pullback on light down volume, or B, a breakout and a close above this resistance level. It should then act as support. RSI in an uptrend, very bullish, making higher lows. Same thing with Ultimate Oscillator. This is what you want to see, making higher lows. The oscillators are confirming price move. Slow stochastics, making higher highs. Very, very good. So the weekly chart looked good. Daily chart, not so good. As I mentioned on the weekly chart, we had buyers above, from back here, looking to get made whole. Look at the topping tails. These wicks, shadows, whatever you want to call them on candlesticks, I call them topping tails or bottoming tails if they're on the bottom. You say tomato, I say tomato. Doesn't matter. What matters is what the market is telling us. And what the market is telling us is that there are sellers above looking to get their money back. We don't want to buy into this selling pressure. We want to do what happened back here. We want to identify that there's resistance above, appreciate the fact we're probably going to see a pullback, which we got. Then we flashed a bottoming tail on the 23rd of November. That was your signal that you had support below. So we need to see the same thing. The market's sending us a signal saying, don't buy now, wait for a pullback, look for another bottoming tail. That's your signal to get long. So CIXI looks constructive, longer term. However, short term, I think you're going to get a pullback. Note the declining up volume. That's not a good sign. SIRI, daily chart. Okay, couple of things with this chart. It's in an uptrend, no doubt about it. However, short term, I have my concerns. We were in a flag formation, and on Tuesday, we broke out above the upper band of that flag formation. Now, today, we closed back down below what should have been a support level. So what was resistance on Tuesday and all last week is resistance once again. And if it were a healthy stock, it would have acted as support. That's not a good sign. Also, RSI broke down below the lower band of its rising uptrend channel. So I wouldn't buy SIRI until we got either A, a pullback to the lower band of this pennant formation, or B, we broke out above Tuesday's highs. Slow stochastics making lower highs, that's not good. So I'm not all that constructive on SIRI. There are reasons why. There are signals that the market is sending us that is telling us to be cautious, tread with caution here. So I would avoid the stock right now until it could show us that it's got support below or strength to push it above resistance. Crocs, I haven't taken a look at this one in a long time, many, many years. This stock paid for my trip to Universal Studios one year. I was walking around having a great time. I was checking the quotes, and Crocs was just ripping through the roof. In fact, let's just go take a walk down memory lane really quick. I remember the last time I was at Universal, right here, June and July of 2011. All right, so enough of that. Since we're on the monthly chart, let's look at historic support and resistance. This is the value of multi-period charting, which I advocate tremendously. We do not enter a trade unless we looked at least 3 different charts. Now, looking at the monthly chart, we can go back all the way to May of 2010. Note the topping tails here. That's resistance. Where are we forming a topping tail right now? The same exact point. So we have resistance going back to 2010, and it acted as support several times as well. So on a macro view, the stock is looking a little bit weak. It's at resistance. I don't like the monthly chart. I think it's weak. Let's take a look at the weekly chart, and then we'll go back to the daily chart. Weekly chart, I'm more constructive. You had a bottoming tail the week of the 9th of February. We have a bottoming tail this week that's a sign of support below. Go back to September of 10. We had support at the same exact spot. Note last week, though, we had resistance at 1128. Let's go down to a daily chart, and we'll come up with a game plan. All right, so RSI making higher highs. It broke out of a pennant formation, bullish. It rallied higher, pulled back, retested the support level, successfully held. It's beginning to rally once again. Now, today, it rallied off of what we saw as a reversal day on Tuesday. You can buy this stock. I wouldn't go all in with the stock. However, if you wanted to open up a third of a position, you need to put a stop loss just below $10.27. Good risk to reward entry point if you use a stop loss order there. And then I would look to add on a breakout and a close above 1128. That means it would have closed above resistance that I pointed out on the monthly chart. So in short, what I'd rather do is scratch the itch, buy a little here, put a stop loss order just below $10.27. Then add on strength. I'd rather pay more to be right. Volume today was good, above average. Ultimate oscillator heading higher, higher lows on Stoke RSI. Watch for your Stokes. See if they loop higher. Higher lows on Williams percentage R. So short term, I'm constructive on it. Longer term, intermediate term, I'm skeptical because I know for a fact, because I did my homework on the stock, we have resistance above going back to 2010. And that's on a monthly chart if you want to pull it up. Angie's List, ANGI, huge move higher. My guess is on earnings. All the oscillators are beginning to loop up. You could see that, especially RSI. Now, we had our gap higher. We pulled back, flashed a bottoming tail on Monday. So this support level must hold. Now, there's two ways to approach this stock. Either A, actually three ways to approach the stock. Either A, buy it here with a stop loss just below 650 if we close below that level, or if we trade intraday below $6.34, stop out of the shares. Keep your loss small. Then watch for support at what was the upper band of the declining downtrend channel. This prior resistance level should now act as support. Don't be a bit surprised to see us retest the support level. So you can buy here. So you can either A, buy here with a stop just below, or if you believe longer term the stock is going to head higher, buy a little here, add more here. If it holds, then buy more on a breakout above $7 per share. But it must close above that resistance level. So 3 ways you could trade the stock. Me personally, with this topping action, I would wait until we got to pull back to this lower band, retest this prior resistance level. That would make me ultra bullish on the shares, and then I would look to buy. And folks, many times I do trade the stocks that are submitted on member stock pick requests because my members happen to be very, very intelligent, and they are some very good stock pickers. So we just may trade these shares. COP, ConocoPhillips, a sector that's just been beaten to death. This is a weekly chart. Conoco was able to rally off of support, which was support going back to a year ago, February 14, and we broke out above the declining downtrend line. We are now in our 3rd week of trading above this downtrend line. It is now acting as support. That is very, very bullish. RSI making higher lows. Ultimate oscillator making higher lows. No breakout yet. Slow stochastics, higher lows, and we have a breakout. So this is a weekly chart, and again, it's only Wednesday. So we want to see where ConocoPhillips trades on Friday afternoon after that final bell is rung. If it appears poised to close above this resistance level for the 3rd consecutive week, I could see opening a position, and then I would buy on strength. But what I would also watch out for with COP is the U.S. dollar. If the U.S. dollar strengthens, you may want to take a more measured approach when deciding on how many shares to buy to open up your position. If you have a strong U.S. dollar, it's going to pressure oil lower. That's not going to help COP. HABT, Habit Restaurants. This sector did fairly well today. Discretionary dining sector. I like the chart. I've never heard of this stock. First time I'm looking at it. This is why I love my members. They bring it to my attention. Great consolidation. Note the double bottom setup. I pointed out the arrows here. Here we have a W formation. Left side of our W. Here's the center or pivot point at $34 per share. Here's the right side of our W, and we are building the right side. We are at resistance. So would I buy it here? Okay. Only a third of a position. Use a stop loss just below this dotted line here, which represents the rising uptrend channel. I would add more on a breakout and a close above $34 per share. I like the chart. Bullish. EYES. You know, I went over this stock. I even posted it on Stock Twits. You can go back. I think it was either last Saturday or the Saturday before. You can check out the symbol. I did an analysis on this stock. I was bullish on the stock, and you know, sometimes you're looking at so many stocks and you don't realize the next day you're going to get a gap higher. And who could have predicted? Here was our buy signal here. We could have bought here with a stop loss just below, but we're looking at so many stocks that look just as good as this, that if I did that, I'd be spread too thin. So the consolidation held. We broke out. Would I buy it here? No, you can't. It's for suckers to chase this one now. And I could have said that yesterday, and it still would have moved higher. And you know what? It could still move higher tomorrow, right up and into resistance, and I wouldn't be a bit shocked. But trading is all about identifying your risk to reward entry point. So when somebody asks me, Bob, is it okay to buy here? Sure, it's okay, but where are you going to put your stop loss? Where's your exit strategy? It's had a hell of a run. I would expect a pullback. You have a topping tail on the candlesticks. We're already seeing sellers move in. And yes, you could say that's what we saw yesterday as well. But we can't argue the fact that we have resistance above. I think that what you need to do in a situation like this, because we get caught up in the moment, and man, we are in the moment. Things are happening with EYES. And if you've been watching it for a while, as I have been, and you're seeing this gap higher, you're kicking yourself. There's no doubt about it. But the discipline is that you do nothing. You sit back, relax, have a scotch, you earned it, watch it rally into resistance, definitely not a short, and allow it to pull back. Take some of the froth off. Then once you see some bottoming action, like bottoming tails such as back here or back here, these bottoming tails, you see a candlestick day like that, that's your opportunity to get long. So I will be watching eyes, pardon the pun, and we'll be looking to get long. Cutting edge technology, huge revenue grower. And that's how it made it onto our screen. DBA. We were long of DBA. We booked our profits up here, and we got out. The stock has since broken down below key support. It's making lower lows. This was a counter-trend rally, basically a short squeeze on a pullback of the U.S. dollar. Now it is beginning to break back down again. This is a continuation breakdown. We don't want to catch a falling knife here. I wouldn't short it. I think it's too late to short. However, I wouldn't buy it here, not unless it recaptured this key support level. Down volume was very, very strong today. I think the path of least resistance remains lower until the market sends us a signal vis-a-vis a bottoming tail, TVIX. Okay, the markets flashed a little bit of topping action today. The S&P 500 closed down, and TVIX flashed a bullish key reversal. Now, it flashed a bullish key reversal off of prior support last seen back in December. So while I'm not completely convinced that the markets are poised to go straight down, especially the small caps, perhaps the large caps, but I think the small caps, they're going to squeeze the shorts a bit more. So we can see NASDAQ 5,000. So I like the bullish candlestick today, especially off of prior support. I would use a stop loss if you're short-term trading this right below the day's lows and look to get out. Strong volume today. And for folks that are not familiar with what the TVIX is, the TVIX is a leveraged ETF. It puts you twice long of the volatility index, the VIX. So this is not for the faint of heart. So a very bullish day on strong up volume. And basically this is a play on the stock market going down, the S&P 500 in particular. Now let's take a look at the S&P 500 or the SPY. Down day today. Note how it was stopped dead once again at prior resistance last seen back in December on the SPY. This topping tail does not exist on the SPX. Note how it disappeared. So that is a spider-specific topping tail, unless it's a bad quote. So we're stopped dead once again at that resistance level. Down volume was anemic. This is almost a doji star formation on the SPY, a sign of indecision. So we can go either way. Either, I know this is going to sound foolish, and I'm not taking a position, but it's true. I don't think that we're going to, if we break out higher, I don't think we're going to just limp higher. This sign of indecision is traders deciding whether or not they are going to blow this sucker out. SPI is going to break out higher, gap higher, or it's going to begin a pullback. One of the two. I think the melt up is nearly done. It's going to have to break out on conviction. So that's what I mean. It could go either way, but I think if it moves higher, it's going to do so on strong up volume, and that may be the blow off top we're looking for in the S&P 500. Okay, next stock up, actually ETF. This is from fellow member Karen. Karen brought this to my attention. Again, my members are very, very smart. HACK is an ETF on the cybersecurity space. I had no idea it was out there. So now we do. HACK, I love it. I love the cybersecurity space. I think that this is a great vehicle to position yourself with in this sector. Now, we have been long of FEYE. We booked profits. We booked profits twice on CYBR. We still have positions in other cybersecurity plays. I love the fact that we have an ETF in cybersecurity. I think this sector is in fuego. I think that JP Morgan's downgrade of CYBR the other day was completely self-serving. They were underexposed to the sector. They knocked the shares back, and I bet you they were in there buying. So, would I be a buyer of HACK? Sure, I would. We had a doji star formation today, a sign of indecision. We may get a pullback to this key support level. I would be a buyer if we flash a bottoming tail. If we close down below the support level, I would hold off because you could get it cheaper. A lot of these stocks that are represented in this ETF are very, very expensive. And I'm not 100% sure what stocks are in this ETF. I'm going to need to do a little bit more research. But if you have names like CYBR in there, which happens to be one of my favorite names, however, it's also one of the most expensive. So if they're overweight CYBR, and I'm not saying they are, I haven't done my research yet, it could see a further pullback if CYBR pulls back. Because if you take a look at CYBR today, it rallied off of Monday's lows. However, it flashed a hollow candlestick. And that was after flashing a top and tail on Tuesday. This is a sign of weakness. Even though we closed higher on the day, we gave up a lot of our gains. That tells me that we're probably going to come back down and retest this key support level. So just be aware of that before you begin to buy shares of Hack, that we may get a pullback, a pause that refreshes. I think that we are going higher. I am very, very bullish on this space. I will be looking to add more. I send out trade alerts on all of my trades, so members, stay tuned. We will be buying, in all probability, Hack at some point in time in the future. Karen, thanks for bringing this to our attention. Great, great pick. Salt, SALT weekly chart. This is a dry bulk shipper. Salt has just been completely decimated along with the rest of the dry bulk shippers. If you take a look at the Baltic Dry Sea Index, we're trading at all-time lows on that index. Just type in BDI on your charting software. If you're using stockcharts.com, put a $ in front of BDI, Baltic Dry Sea Index, and it's just been decimated. Now, the stock itself is actually doing quite well so far this year. It got off to a rocky start, broke down below key support, found a bottom at 1.31, rallied back, recaptured support, consolidated, broke out above the upper band of the declining downtrend line. It's been flashing bottoming tails. We're at a little bit of resistance, not major resistance. I think that SALT heads higher. I like the name. Let's take a look at the daily chart. This was just pure institutional distribution. Incredible sell-off. This was just capitulation selling. Classic bottom. So I think that the lows are in for SALT, and I think that we're heading higher. Higher lows on RSI. Note the double bottom setup, and higher lows above the 50 level. Looks good. I would just use a stop loss just below. Give it a little bit of room, 1.92. If you really want to give it some room, 1.72, and then look to get out. Apple. Okay. Apple's a concern. Let's note how we have no trend lines here. I'll be back in a moment. Okay, this is a weekly chart. Note how we are in an uptrend channel. No shock there, right? Apple is very, very critical for this market. And the reason why it's so critical is because it's the only company that really decimated earnings, really killed it on earnings. In fact, S&P earnings would have been flat this quarter were it not for Apple. Apple goosed the entire S&P earnings. So now it's trading up and into the upper band of resistance on a weekly chart. The S&P 500 is overbought. Apple is overbought. And if any stock deserves the right to move higher at this PE, it's Apple. And if Apple pulls back, there is absolutely zero reason why the rest of the stock market should be moving higher. Note the lower high on Ultimate Oscillator. Again, this is a weekly chart. This is not a daily chart. So this is a higher level view of the battlefield. We are into resistance, and we saw sellers above. Can it rally back? Sure it can. I wouldn't be a buyer here, not while it's breaking out above the upper band of resistance. I wouldn't do that. Let's go to a daily chart. Okay, daily chart. Now in blue, I have overlaid the S&P 500 because I want to point out the divergence that's going on. Apple by far is king of the hill in terms of profitability, just on all measures. It's just king of the hill. It's cheap relative to the S&P 500. Forward-looking guidance is strong. However, it's underperforming the S&P 500. That's not a good sign. That's relative weakness. And the fact that we are underperforming the S&P 500 tells me that the S&P 500 is overbought, overextended, and ripe for pullback. It has no business outperforming Apple. So Apple, I would be cautious on, mostly due to the weekly chart. I would look for a pullback. 122.50 looks good. Or if you're a very patient trader, you want to trade the channel, buy at the lower band of this rising uptrend channel. And the longer it takes, the higher this lower band is. In all probability, 115 to 120 will be the ultimate support level for Apple. And that will coincide with the lower band of the rising uptrend channel some point in time in the future. So I like Apple, just not here. MARA, Marathon Patent Group. This is another one I went over on, I believe it was last week's best stock picks. And this is one of our stocks under $10 with great revenue growth. Weekly chart. It's broken out above the upper band of its declining downtrend channel out of this triangle formation. Broken out on RSI. Volume is light, no doubt about it. Like to see this week's up volume bar exceed last week's. Double bottom setup on Ultimate Oscillator. So the macro view, the higher level view using a weekly chart is very good. Now let's take a look at the daily chart. Because with the weekly chart, we identify our opportunities. With our daily and intraday charts, we identify our entry point. So we've had a bullish key reversal today. We do have resistance above. I'd be fine with opening up a position here with a stop loss just below, let's call it 6.82. Volume was weak today. So MARA looks good. Breakout on RSI. I like the chart. Last symbol up is OIH. This is the Market Vectors Oil Services sector. Very similar commentary as to what I discussed about ConocoPhillips. Watch out for the U.S. dollar. Strength in the U.S. dollar may mean weakness for the oil services sector because oil is priced in dollars. A stronger dollar means weaker oil prices. That being said, we've had a hell of a downtrend. We are breaking out on a daily chart above the upper band of resistance. A bullish key reversal today. The chart looks pretty good. I would advocate a buy of the shares, but I would use a stop loss just below 34.74 and watch out for that U.S. dollar. If the U.S. dollar begins to strengthen and oil begins to weaken and OIH begins to weaken as well, I wouldn't even wait for 34.74. I would stop out before that and just get out. Why fight it? If it begins a breakdown in the face of declining oil prices and a rising U.S. dollar, do not fight it. Just get out. But the chart looks good right here and now. And that's it, folks. If you have any questions, shoot me an email. Members, keep populating that ticker cloud, and I will talk to you soon. Have a profitable trading week. Be well, folks.